Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Santos. Here are today's top stories. Socio-Economic Planning Secretary Arsenio Balisacan admits that persisting inflation could cut economic output in 2023. President Bongbong Marcos says addressing inflation remains a top priority of his administration.
With the peso's weakness seen to fuel inflation further, the president says the government is ready to defend the local currency.
Finance Chief Ben Jocno expresses confidence that the real estate sector will continue its recovery from the pandemic as the country moves toward the new normal.
And PLDT says Dito Telecommunity is open to amicably settling its 430 million peso contractual obligation. We begin our broadcast with Socio-Economic Planning Secretary Arsenio Balisacan conceding that soaring prices could weigh on growth in 2023. Balisacan says sustained inflation shocks could cut economic output by up to 0.6% next year. He made the statement after Balisacan and the rest of the economic team met with President Bongbong Marcos in Malacanang. The president said mitigating the effects of inflation remains the top priority of the administration. Now recall that inflation accelerated to 6.9% in the month of September, marking the sixth straight month that the Consumer Price Index breached the 2022 target of 2 to 4% set by the Bangko Sentral.
Sustained increases in inflation in 2022 and 2023 will cause a slowdown in our economic growth, translating into a GDP level lower by 0.6% in 2023. While we expect our poverty situation to improve as we continue our recovery, inflation and rising interest rates will mute this improvement.
However, Balisacan reiterates that the rise in inflation is only temporary. He says part of the government's solution in addressing soaring prices is assistance to the most affected sectors.
The intention is to address this inflation, particularly providing assistance to the most vulnerable and poverty groups by continuing the subsidy programs, for example, that are currently extended by DSWD, our cash subsidy programs, our assistance to farmers and fisher folk, to our drivers, and so on.
As officials search for means to control inflation, President Bongbong Marcos says the government is also ready to defend the peso. In a tweet, the president said the government may have to address peso depreciation on the back of fears that it could further push the prices of goods higher. But the president said that despite a weaker currency, the Philippines is still faring better than other countries in terms of inflation, although economic developments are still anticipated. President Marcos made the statement after meeting with his economic team in Malacanang on Tuesday, October 18th. According to Socio-Economic Planning Secretary Arsenio Balisacan, the government could also intervene in the financial markets.
We are monitoring also the developments closely so that we can also deploy our monetary tools like the interest rate, for example, and how we can intervene in the financial market to tame these, including the depreciation of the peso.
In other news, the government is confident that real estate services will recover on the back of higher demand due to the reopening of the economy. The Philippine Star reports that Finance Secretary Ben Jocno is optimistic that real estate services will see a rebound as the country moves toward the new normal. This as work-from-home employees start to shift to a hybrid setup, allowing the return of demand for spaces both residential and commercial. Jocno is also banking on the recovery of the tourism sector to boost the real estate industry's growth as travel restrictions become less stringent. Just how on track is a property market's recovery? Leechiu property consultants saw robust growth in the third quarter, but will that be sustained? Let's get answers from their CEO, David Leechiu. David, thank you for joining us today. Again, looking at your report, we did see a strong demand here still in the office market, driven primarily by the IT BPM sector, 57% of these spaces in the third quarter. Do you see that picking up further? That's despite the extension of the hybrid mode of work for the industry.
Yes, we're quite confident that things will keep improving in the office sector. I'm very happy to say that the projections we made late last year are going to be exceeded for how things will look like this year. So I think we're going to end the year closer to 800,000 square meters, which is great. It's been the highest volume of transactions we've seen since January of 2020. And yet it's still roughly about 50% of what it was in 2019.
Okay, but how long before we actually get to those levels? And more to the point here, you're seeing robust growth for the sector, for the BPO sector. Question is, can the office market keep up with the demand?
Well, there's a lot of supply in the market. So at the moment, the current vacancy in the Philippines is 3 million square meters, as against a demand of 800,000. So there's still a big gap between the supply and demand. And why have prices not crashed through the floor? Well, that's because 98% of tenants renewed. Number two, there's still a very strong pipeline of deals that want to get done between now and the next 6 months. So, and third, the BPO sector is going to keep growing. And they had a record year in terms of hiring in 2020 and 2021, 150,000 new jobs created. And only 20% of those jobs have found office space. And so there's going to be pent-up demand in 2022 and 2023 as people move back to the office. And I do think that work from home will slowly transform to work near home, as companies locate in deeper provincial locations closer to the workforce.
Okay, so still on that trend, no, David, anecdotally, it doesn't seem that COVID is currently driving the work from home situation. People are eating out in the malls, seeing their friends, and still working from home. It does seem to be the case that inflation is the issue now. I mean, nobody wants to spend on transport. They've been comfortable already from home. So it seems like there's a wait and see mode on whether, prices will be going down. Then they might be going back to the office, or if infrastructure is improved. Give us a fundamental update on the situation in the Philippines. To what extent can we circumvent these issues on making it expensive for people to go back to the office when they do actually want to go back?
Yeah, I do think that infrastructure is going to have a big play, because it's not really so much, well, yes, the cost for a number of people, but also the time for a number of people. People who used to commute 3 hours per way, 2 hours per way, an hour per way, are just finding it kind of ridiculous already.
Right.
But what they're also realizing is that they're missing out on all the action if they don't go to the office. What about promotions? What about engagements with the boss? I mean, there's so much of that possible when you can't do it face to face. Just like this, the interaction we have with this setup is so limiting compared to what it would have been if we sitting across each other. So that's what people are now appreciating that they're missing. And so promotions are partly got to do with the amount of work, productivity output, but also a direct result of how much engagement you're able to get with senior leadership, and how much senior leadership is able to call you by name and remember you when it's time for those appraisal reviews.
Now, David, the Build program of the previous administration attempted to circumvent that. And then, we had the pandemic, a lot of the projects got derailed. To what extent are we back on track in terms of improving infrastructure. We had specific, growth areas, Pampanga, for example, that was going to be connected to the airport already. Which areas do you think will be clearly benefiting in this, let's say, new normal, new administration, and which projects are on track?
So Mega Manila is going to be the biggest beneficiary of all these infrastructure projects that we've picked up from the previous administration that is very well being carried forward in this administration, plus more. So Mega Manila being Pampanga all the way down to Cavite, Laguna, Batangas, Rizal. Rizal is probably the laggard.
Okay.
And that's why the property prices have not moved as much as Rizal, because we need to bring more infrastructure to the Rizal area and behind it. So I think that plus Quezon, plus Visayas, all over the Visayas plus Palawan, you have so many infrastructure projects happening. And I think the precursor there will be Clark, because Clark will be the missing link. And yes, while it only will have a capacity of 8 million people versus 40 million people in Manila, it's going to be a release valve or a stopgap until we create the big airports. Whether it's going to be in Sandy or Bulacan, who the hell knows? But I'm quite confident that tourism will dramatically improve with Clark, because then Clark becomes a gateway into Palawan, into the Visayas, into Mindanao, without having to fly into Manila and go through the tortures of Manila.
Okay, this time let's focus on one particular sector, POGOs. I mean, in our previous conversations, you were quite optimistic about the sector's possible bounce back. But looking at the report, they only account for 3% of total demand. Are you still as bullish for the sector?
Well, as many people might know, some of the leaders in this country are wanting to shut this sector down. So we've had a fantastic ride in the last 35 months. 36 months, right? Despite COVID, Metro Manila leasing transactions still clocked 1.65 million square meters of office space taken up. Okay, that's massive compared to many countries. We are the envy of the office sector in the world because of this volume of transactions that still happen. Now, despite all that, we're just 50% of where we were in 2019. We need the POGO sector to participate in this. And what's been holding them back? Well, many things, from immigration issues to travel restrictions to capital restrictions from China. And China is not just targeting the POGO sector, it's targeting everybody who's trying to bring capital out of China somewhere else. Okay? It is trying to bring in all the money that left China. And it's doing that with very painful measures. In addition to that is, all these tax issues, and then all the senators and congressmen that are saying, maybe we should shut this thing down. And so I've been to 2 Senate hearings. I've got a 3rd one coming up, trying to make people understand that, frankly, this is not the right time to close this sector. We need this, not just for the real estate sector. In fact, the real estate sector, yes, it's one of the most prominent beneficiaries of this sector. But let's not forget, the government is a very direct beneficiary of the sector because of all the taxes it's collecting, both directly and indirectly. And then you've got hundreds of thousands of Filipinos that have jobs depending on this industry. So this is not the right time to kind of contemplate on doing anything like this. It is sending foreigners who are legitimately operating in the Philippines a very bad signal. Plus, the POGO sector is not just about China. Yes, it is the most prominent segment of the POGO sector, but it is not the only segment of the market.
Okay, very clear answer there, David. Moving on to the retail space, no? Anecdotally, the foot traffic is crazy. It's very hard to even get a seat at the table if you eat out in the mall. How is this faring compared to office space in terms of retail space? Are people, going back to eating out instead of buying from, delivery platforms or e-commerce platforms? And is there a possibility that the office spaces will be transforming into more retail-oriented hubs?
No and no. So there's all over the world, there's been a dramatic increase in online retail transactions during COVID and lockdowns. And then once people were allowed back and lockdowns were lifted, those transactions dropped precipitously. So I don't understand why we have to go to the market to buy chicken or, whatever. Maybe to me, chicken is chicken. Maybe to other people, chicken is not chicken, I mean, they like to make pisil and whatever. But all of those things you can do online. And what I guess you would want to save for face-to-face interaction with the retail mall and the product are all the high-end luxury goods and stuff that you need to fit and all that. But then people still decided to go back to the supermarket and do the most utilitarian, mundane things face-to-face, physically. Right. And that's, I guess, a sign of human behavior. It's a testament to human behavior. Retail is definitely picking up, and you see that in the volume of restaurants. As we said, back in April 2020, the companies, the retailers that do survive this will have a heyday because competition has been weeded out in the last 30 months, and the ones who remain are benefiting from the surge in retail activity. And I do think that the office sector is slowly accepting more and more retail traffic into the ground floor spaces of the buildings. And malls that were contemplating on converting some of the mall space into office are going back to converting to retail.
And then, David, of course, lastly, we cannot not talk about the residential space here. Based on your report, you're seeing consistent demand here. But at the same time, do you expect a possible slowdown here, especially when rate hikes kick in?
If we shut down the POGOs, then the velocity in the residential sector and the office sector will be hit quite negatively. And then that will impact sentiment. And everything else will slow down after that. Okay? So why have capital values in the residential sector all throughout the Philippines continue to hold ground, if not appreciate? In most parts, it has appreciated anywhere from 5% to 300%. In very few cases, they have been distressed transactions, but that is an exception to the total number of transactions happening. Ayala Land Premier, for example, continued to break records in new launches in both pricing and take-up. So I think that's a very good sign. The only way you can explain that, three things. First, the savings rate generally is higher than what everyone thought.
Okay.
Which was not transparent. Number two, the borrowing rates, the level of debt was actually much lower than what many people thought. And number three, jobs continue to be created in the Philippines because of the PPO sector and the POGO sector.
All right, great insights there. Thank you so much, David Leechiu, CEO of Leechiu Property Consultants.
Thanks, guys.
Now let's pause for a quick break, but coming right up after that. A think tank forecasts domestic GDP to grow by just a little over 4% in 2023.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Businessworld live here on One News. I'm Jess Delos Santos.
And I'm Danie, Laurel.
The country's economy may grow by just 4.1%, 5 to 8% target. That's according to forecast by Economist Impact, the research arm of the Economist Group. Citing Economist Impact, the Philippine Star reports that economic growth may fall below targets next year due to elevated inflation and the risk of a global recession. Economist Impact Regional Policy and Insight said Andrew Staples warned the government to prepare for higher cost of borrowing abroad as central banks all over the world try to arrest inflation by raising interest rates. But for this year, Staples told the Star that they are expecting Philippine economy to grow by 7.6%, slightly above the government's target of 6.5 to 7.5%.
The agriculture sector has lost over 350 million pesos following the onslaught of Tropical Depression Maymay and Typhoon Neneng. Now, in its initial assessment, the Department of Agriculture says damage and losses have reached 355 million pesos so far. The two storms affected the livelihood of nearly 12,000 farmers from the Cordillera Administrative Region, Ilocos Region, and Cagayan Valley. The agency consolidated the reports for Maymay and Neneng as they both hit the same areas. Now, the onslaught of the two storms resulted in a production loss of over 25,000 metric tons. Rice makes up 97% of the affected commodities, while the remaining portion is divided among high-value crops and corn.
With more COVID-19 subvariants entering the Philippines, the Octa Research Group warns that those infected could experience new and returning symptoms. Octa Research Fellow Guido David tells the chiefs that aside from the usual flu-like symptoms, patients may also experience nausea, vomiting, and diarrhea. On Tuesday, October 18, the Health Department confirmed 193 cases of XBC variant and 81 of XBB subvariant, which is said to be the cause of the recent surge in Singapore.
The usual symptoms are yung mga flu-like symptoms, but now there's new additional symptoms with this XBC or maybe even the XBB is new, meaning dati nawala na yan and ngayon bumalik. It could be affecting both the upper airways and the lower respiratory tract.
In the same program, health reform advocate Tony Leechiu called for the suspension of optional outdoor masking and in-person learning. He explained that the government needs to reassess its current policies, citing low vaccination turnout, especially among minors.
Baka we need to suspend that at least one lang for the next 2. Kasi kung hindi natin yan i-re-evaluate, that will be a problem for all of us. Kasi airborne kasi siya. So prudence will be, to me, the best decision na gawin ng palasyo.
The Philippine Competition Commission says its approval is no longer needed for Grab Philippines' acquisition of motorcycle taxi firm Gov't. Based on its assessment, PCC says Grab's acquisition of Gov't did not breach the threshold for compulsory notification. The commission noted that Grab and Gov't entered the transaction when the 50 billion peso notification threshold under Bayanihan 1 was still in effect. Grab Philippines earlier said that the merger amounts to below 1 billion pesos. Though the transaction can push through without the PCC's approval, the competition watchdog says it may still launch a review if the PCC suspects that it will result in a, quote, substantial lessening of competition.
PLDT says Dito Telecommunity has expressed openness to settle its unpaid contractual obligation of 430 million pesos. Now, in its statement, PLDT says the amount due is for services that it continues to provide, and so Dito may in turn provide services to its users. This comes months after Dito filed a complaint against its competitors due to allegedly insufficient connection to allow phone calls from Dito subscribers. PLDT says it is reserving legal options, including suspension and termination of its services in case Dito does not remedy its material breach by November 4. The company also says dito must cease attempts to mislead the public by claiming that PLDT's efforts to collect its debt as an anti-competitive activity.
And those are the biggest stories on the economic and corporate front today. I'm Delos Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us.
And you're still watching Businessworld Live here on One News. Now, Dan, let's kick things off with the property sector. We had David Leechiu earlier saying, we're seeing robust growth in the sector, despite the fact that we're just 50% of where we were, but at least pre-pandemic levels.
But you've also got, he did as well echo the statements of Finance Chief Gov't, saying that we will be seeing that in a while. It does seem to be the case that at least for today, the property index is down by 1%, but, Justice does follow 5 straight days of gains that we had seen in at least broad-based gains in the local bourse, but also following some statements that there might be tighter rate hikes, which would of course impact the especially the residential property space. You can see only 3 in the property space actually holding their ground here. And on that note, just a quick peek at how we are opening our index. A bit of a pull down, but still above 6,000 levels. And if you take a look at the past 3 days, we're still back up 3% from the past 3 days, Jess.
Again, of course, we cannot afford not to check about the peso, especially after the president's statements here that we are ready to defend the currency.
Exactly. So now BBM taking to Twitter to saying what the peso will be looking like. You can see, however, that at least for the day, the peso is weakening to 58.840. Let's see whether the president will be following up that tweet with further statements on how in the strengthening of the currency.
And that's it for today, October 19, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Delos Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.